I'm back.
Hello. Hi, both of you are back. We're going live on YouTube now. Let me just. Hello. Yeah, it's always a problem because YouTube sound also comes to me. Yep. Uh, right. Should we maybe give like one more minute and then start?
Sounds good.
Yeah, we can give one more minute. Okay, I think we can start now.
Mm-hmm.
Okay. Um, Great. So firstly, thank you everyone so much for attending the fifth session in this year's series in Advanced Political Economy, hosted in collaboration between SOAS, the New School, the Forum for Real Economic Emancipation, and supported by the General Federation of Trade Unions. My name is Karthik Manikam. I'm a PhD student in the economics department at the New School and a research associate at the Schwartz Center for Economic Policy Analysis, and I will be chairing today's session. So today's session talks about a particularly timely concern, welfare regimes and capitalism, housing and pension. We're building on previous conversations on inflation and austerity to look at the hegemonic role of welfare regimes under capitalism and focusing particularly on housing and pensions, and looking at how the privatization and individualization of these necessities have enriched capital and become major channels for profit making and accumulation. We have two very eminent and very excellent speakers today. We will be structuring this as follows. We'll have about 15 minutes or thereabouts for each presentation. And then be going into an open discussion thereafter and followed up with questions and answers. There should be a question and answer um, chat box that you can enter your questions into, which we'll be monitoring to facilitate conversation. So without further ado, let me introduce our first speaker, Professor Manuel Aalbers. Professor Manuel Aalbers is Professor of Human Geography at KU Leuven, where he leads a research group on the intersection of real estate, finance, and state. He takes a political economy approach to studying the effects of big processes like financialization and neoliberalization on cities and housing markets across the globe, and has published on redlining and exclusion, the privatization of social housing, neighborhood decline, and gentrification. He's also the author of Place, Exclusion, and Mortgage Markets, and the Financialization of Housing, as well as associate editor of the Encyclopedia of Urban Studies. Professor Manuel.
Thank you very much for that introduction. Let me just share my slides. 1 second. To say allow. I think you can see my slides now. Yeah, okay, good. Then I'm gonna maximize my slides, but that means I won't be seeing any chat or anything else. So if there's anything, just speak up and let me know if there's something wrong or if you can't hear me or if I'm going too quick. So thanks a lot for this invite. Happy to talk here today. I will be talking mostly about housing, a little bit about pensions, because the two topics are actually very much related. I do this based on a variety of papers that I've written over the past couple of years, together with a variety of co-authors. So not everything that I'm saying is just my single work. Sometimes at the bottom there's a reference if you want to look up more about a particular slide. Of course, I'm also relying on work of other people here, which I will also mention. And then one of the slides also I will present is based on a new research project called Equal House, which is a European Union sponsored research project where we look at equality and very much inequality in housing systems across the EU and the UK. So this is a picture that comes from a report from the former UN rapporteur, Lailani Farah. You may have seen her documentary Push about housing prices, housing rents going up around the globe. And afterwards, she started an NGO called The Shift. And she asked me if there were kind of these data available where you could really show how housing prices are going up around the world. So I put her in the right direction. Where can you find this kind of data? And then she made these graphs, or probably had some of her people made these graphs for I think 12 different countries. So I just took a screenshot of 4 of them because all 12 might be hard to see. So I picked one where you had next to each other 2 Western countries, in this case New Zealand and Germany, and 2 global South countries, Chile and Mexico. And what is quite remarkable here is that all those graphs actually are exactly the same years, 2050 to 2020. And also, these are nominal values, and they use the same vertical axis also, so they go up to 150. Very often when you see these kind of comparisons, either the years are a little bit different or the index numbers are different. But what you actually see here is that all of these countries have a more or less stable level of income, average wages, the dotted line. In some countries it goes up a bit, in some countries it's almost flat, it goes up and goes down a little bit, but the differences are relatively small. And then there's the other line going up quite steeply, and those are housing prices. If we would make a similar picture for rent, we would see in many countries, in many cities also, we would see a similar picture. So what I'm arguing is not that these 4 countries are unique. What I'm saying is that this is happening across the world. House prices rise. Very often rents do too, although rents are a bit more complicated. But income levels remain relatively stable. And my argument is this happens in most cities and most countries around the globe. I think if you would actually do a proper study on this and try to get data for as many cities and countries as possible, my hypothesis would be that for more than 95% of the countries in the world, you would find something like this. So very often people explain these stories and they say like, oh, but there's something particular in New Zealand. Oh, there's something particular in Chile. You need to learn this about my country to understand these. And I'm not saying that these things are not important. I think it is important to understand those local and national stories. But if something like this is going on in almost all countries and all cities around the globe, there's also something more going on than just a story about New Zealand or a story about Chile. So I will tell you in the next 10, 12 minutes or so part of the story. I can't do the whole story. But in the title, there was also a connection, how we would connect pensions and housing to welfare regimes, to welfare states, to political economy, kind of ideas about different kind of states. So I refer very briefly here to the ideas of the Swedish sociologist Asping Andersson. He probably had the most famous typology of states, the typology of welfare states that he developed, well, now 35 years ago or so. And he came up with 3 types we know quite well: the liberal welfare states, the corporatist welfare states, and the social democratic welfare states. Typically these days, we also talk about familial or Mediterranean welfare states, but Asping Andersson himself actually was quite skeptical about adding a 4th type within Europe. He said this 4th type is a subcategory of the second. And after years of people saying this is a specific type, he said like, well, okay then, but I really think it's just a subtype. Then, of course, over time, people started to talk about other types: post-socialist regimes in Central and Eastern Europe, East Asian welfare regimes, and then people were discussing hybrid models. The Netherlands, where I'm from originally, although now based in Belgium, is often seen as a hybrid model between the corporatist model and the social democratic model. Also, there's been discussions: how static are these models? How dynamic are they? The UK is interesting here because when Asping Andersson wrote about this and said this liberal model, I'll think of the UK next to the US. But he actually said the UK is not a very clear cut. It seems to be sort of in the liberal model, but it still has some characteristics of the social democratic model. Well, now 35 years later, probably most people would agree the UK is very much in the liberal model. But then again, if we try to apply this for housing, and many, many housing scholars have tried to do this, it actually doesn't work so well. And why is this? Well, Asping Andersson developed this model based on three pillars of the welfare state. The first three you see here: social security, healthcare, and education. And based on studying how this is organized in many different countries, he came up with the types that we saw here. But he didn't look at housing. He actually, at some point, says quite specifically, housing is actually quite difficult to deal with. It doesn't map so well on other welfare state models. There was a Norwegian sociologist who called housing the wobbly pillar of the welfare state. And that's also because very often it's not covered as much by welfare states as other parts of the housing market. If we think of the Scandinavian countries, some of them do a lot of social housing, but some don't. Some of them, like Norway, are actually very much focused on home ownership and on mortgage markets, even though otherwise they look quite similar to other Nordic countries. So in that sense, the model of Esping Anderson doesn't work so well. And there's been many discussions over the years how to do this differently, how to come up with different models. Here we see a picture from a report from Housing Europe, which is basically the umbrella organization, or if you will, the lobby organization of social housing providers in Europe. This is a picture from a few years ago, so the data may have changed a little bit. And it shows how much social housing there's in Europe. And you see some patterns, but you also see quite some things that are difficult to interpret if you think of these welfare state models. The UK, 18% is actually not that low, much higher than a lot of other countries here. Higher than even Finland, for instance, which is known, as one of the most expansive real welfare states. Then if you look in sort of Eastern Europe, you see very low percentages of social housing. Southern Europe, the same. And then, yeah, the Netherlands is very high, 32%, higher than the Scandinavian countries. France is still relatively high. Austria is, but they're still in the same group as the UK. So it's very hard to see these welfare state models here. It's very similar if we would look at home ownership models. And this is a graph from a report we've just sent off yesterday. So we're not even sure yet if it's coming out still this year or next year. This is part of this Equal House project that I mentioned before. And what we try to do here is to come up with a different typology for housing systems. I'm not going to explain that whole typology here, but what is interesting to look at the key on the top right here, we came up with 5 different groups, and even then there's a few countries, 3 countries that are still hard to map. So this is all the EU countries plus the UK that we try to map here. And then you see, actually, even if you do 5 types, it's still very difficult to speak of significant types within the UK. But if you look, for instance, at this deep market integration, the purple model here, we see that at the very top of the graph. We see 3 countries that, normally speaking, would have been in different welfare state models: the Netherlands, Denmark, and the UK. These are, in a way, the most financialized housing markets within Europe. At the bottom right, we see limited mortgage development. These are typically countries in Central and Eastern Europe, countries with very high home ownership rates, but very small mortgage markets for specific reasons that I won't discuss now. But not all the Central and East European countries are in that group. So also that makes it quite different. The red scenarios are also very interesting. Boom and bust. Spain is the one that really is striking here, going up and then going down, because what we did here, we followed 3 different years. So you see really the trajectories. Typically, very often when you see these graphs, you just see a dot on a graph. What we try to do is have 3 data points. Each data point is an average of 4 or 5 years. So you see the development since 2008 up to the most recent statistics. And then you see actually not just a dot, but how there's a trajectory of countries, and then you can compare trajectories rather than just comparing where countries are in a particular moment of time. So even though, as I was showing before, there is this general picture, at the same time, we have a picture that is entirely different. So yes, we need an explanation that addresses both of these things, I would say. But to go back to some of the similarities, I think this is a very interesting graph. This is not a graph I made myself. This is from a report by Jorda and colleagues, 2014, so a few years ago. And what they did is for 17 OECD countries, so 17 rich countries, North America and Western Europe, they looked at the ratio of bank lending to the size of the economy, so to GDP. And what you basically see here, the blue line, non-mortgage lending, so all the lending that banks do that is not mortgages. So lending to governments, lending to big corporations, lending to mom and pop stores, credit card debt, car loans, student loans, everything is in here except mortgages. And you see, of course, that line goes up. First World War doesn't have much of an effect. Second World War has a massive effect. It takes a number of decades before we're back at the level from before the crisis of the 1930s. And the line then in the end goes up and down a little bit, it goes up a little bit more. But then you look at the line of mortgage lending. And first you see the two lines are sort of tracing each other. They're going up almost at the same gradient. First World War then has a big impact on mortgages. Second World War too, but not as much as on non-mortgage lending. Actually, the years of the Second World War, for the first time in history, for a few years, you have more mortgage lending than non-mortgage lending. There's probably an interesting PhD in economic history that should be written about that, maybe even compared to the First World War, when you see a very different effect. And then again, you see the two lines going up at the same gradient, and then something starts to happen in the mid-1980s. All of a sudden, the red line starts to go up much steeper, and by the mid to late 1990s, the red line crosses the blue line. So this doesn't mean that in all of those 17 countries, there is now more mortgage lending than non-mortgage lending. But if you take a weighted average of those 17 countries, there is. The paper and the report by Jordan and colleagues also have graphs for individual countries. For the UK, for instance, you can really see 1 year after the election of Margaret Thatcher, you see that red line go up. For other countries, for the ones that I know a little bit, 5 or 6 countries, I try to see, can you trace really political shifts from left to right? It's not so easy. The only one in which you can really see that is 1 year after the election of Margaret Thatcher. But then Labour comes in and the red line just keeps going up and even goes steeper. So you have once this shift in the UK, and then in a way it doesn't stop anymore. If we would make the same graph now for middle income countries in the global south, so not the poorest countries, but large parts of Latin America, the Middle East, but also parts of East and Southeast Asia, you will now see that those are the countries where, since the global financial crisis of 15 years ago, you now see the big increase in mortgage lending. In some Western countries, this has stabilized. In some, it's still increasing a bit, but it's really in those middle income countries where you see the massive increase of mortgage lending at a much lower absolute level than in the West. So it's not really catching up yet, but in terms of the growth of the market within, sort of the national context is really quite stunning as well. I don't have a graph showing that for a whole range of countries. I hope someone else would make that, and then I will put it in my next presentation. So, but what this graph shows is that banks are in the business of lending on real estate. Everything else they do is secondary. So people often say like, oh, but this financialization of the economy, that's happening everywhere. It's happening to the pharmaceutical industry. It's true. It's happening in education. That's true. It's happening in the car industry. All true. But housing in a way is more important, partially because actually the numbers show that housing is bigger. And of course, also because housing is a human need. So I would say financialization of food, housing, and maybe a few other things like education, healthcare are really more important than some other things. But then housing is also a bigger thing, partially because for most households, housing is the biggest thing they will ever invest in. Individuals buying one home is their biggest investment over life. So I'll try to speed up now, go a bit quicker to the next slides. I'm not sure how I'm doing on time, but I think I probably have about 5 minutes left. So what I'm showing here is what happens with some of the financialization of rental housing. And this is based on a study we did on Germany. Germany had a massive privatization. More houses were privatized in Germany in about 10 years than the right to buy in the UK over 30 or 40 years. So often the reference point internationally is the right to buy. And I referenced Margaret Thatcher myself earlier, but actually what happened in Germany is much more striking. So what we see in 97, all of these housing associations that we see to the left are publicly owned or were non-profits, sort of at an arm's length of the state. So that's what I put in light blue here. Then from the late 1990 onwards, regulation changes and it becomes possible to privatize entire housing associations. So not like in the UK, council housing being sold by the unit, but actually here entire housing associations privatized and sold to investors. So in white, we see a range of different investors, typically financial investors, but they're different kinds of investors. So I won't discuss them. What we see in green here is private equity and hedge funds coming in. And they are typically based either in the city of London or in Wall Street or anywhere sort of in the London or New York metropolitan area. They may be dealing with global capital, but they organize this global capital through the main 2 global cities. And their business model is in a way quite simple. You buy low, you sell high. These organizations have no interest in investing in housing in the long term. They think affordable housing is undervalued, so they buy it cheap and they sell it high. This is in a way the most pure or the most narrow definition of speculation. Then what we see in purple here is a new wave that follows on the green one. You see in two cases, the green one doesn't happen first. It goes without sort of that green phase of private equity and hedge funds in between. The purple ones are also investors in housing, also private organizations, but they are listed real estate funds. So they're often discussed as if they are the same thing. Oh, it's private equity and it's real estate investment trust, but these are very different organizations because the business model of these organizations is fundamentally different. Whereas the ones in green make money by buying low and selling high, as I said, the ones in purple, of course, if they can buy low, they will, and if they can sell high, they will, but their main business model is charging people rent. Also, the ones in green can invest in anything, but what they typically invest in is something that is undervalued, but it could be any industry on earth. If you are a real estate investment trust, you can only invest in real estate. And if you do offices, you only do offices. If you do residential, you only do residential. So these are a very different kind of beast. They're also there to make profit, but they make profit in a quite different way, really by making sure they get enough rent in. And why is this important? Well, for many reasons, but one of it is that a lot of pension fund money goes into this. So here I'm just showing the Dutch institutional investors. So these are pension funds and insurance companies. And we did data every 10 years just to show like how is the investment portfolio growing of these investors. The Netherlands is a small country, but the third largest pension fund in the world is actually Dutch, ABP. So a small economy, but in terms of institutional investment, the Netherlands is one of the bigger countries on earth. So we see basically a doubling of the investment portfolio every 10 years, which is nice if you have a Dutch pension. But here we see quite a different picture. And I won't discuss the whole picture, but try to look at the bar with the little dots. This is money that pension funds put into real estate, not by buying real estate, but putting their money basically in what we see here as the purple funds. So real estate investment trust and other listed real estate funds. And what you see there is that in 1982, those funds barely existed. And by 2012, they are investing a lot of their money in these funds. So this is what typically happens. We talk a lot about the super rich investing in housing, and yes, that happens. And if you're in particular neighborhoods in London, that is really significant. But in most countries, the biggest investors in terms of volume are actually the pension funds. But the pension funds buy up a lot of housing, not directly, but through funds. They also buy up a lot of mortgage securities. So the reselling of mortgages that was also at the root of the global financial crisis. So this is a very important connection between housing and pensions. If you are enjoying a pension or you're saving for a pension, have one in the future, I think there's a more than 9 out of 10 chance that your pension fund has put their money in these kind of funds that you see here in purple. I have the German example here also because this is a really big market in Germany. It doesn't mean they're German pension funds that put their money in here. We looked at it for some of these funds. They're listed, so you can find the biggest shareholders. A lot of them are those funds that then put, again, money in there. And behind those funds, again, are other pension funds. So that's a significant picture there. Here, we looked at the two biggest markets for residential real estate. So this is basically typically rental flats. Some of them are single family homes. And the two markets on earth for this are the US and Germany. So you've seen them mixed here. And basically you see here the market capitalization between 2000 and 2020. And you really see there's a small impact of the global financial crisis, 2007, 2008. But the real growth is actually not before the crisis, but afterwards. So people think like, oh, the link between real estate and finance was at the root, you could say, of the global financial crisis of 15 years ago. Actually, more than 15 years by now. But actually, that connection has been developed much more since than it was before the crisis. So this is my last proper slide. After that, just an end slide. Why should we care about the financialization of housing? The financialization of housing is driven by the demand for financial products rather than the demand for housing. Very often these pension funds and also other investors will say, policymakers will often also say, oh, but it's great, we need investment in housing. That's true, but these practices focus mostly on the existing housing stock rather than on new construction. Although this is beginning to change to some extent, there's now some investment in new construction. But if investors buy up existing housing, of course, this doesn't add any affordable housing. a lot of pension funds say like, oh, we're so great, we invest in affordable housing. No, what they actually do is they put money in existing affordable housing, but then they price it up because after their investment, they want to get a higher return on investment. So the rents go up further. So what they actually do is they make affordable housing less affordable over time. So this additional supply of finance often does not result in an additional supply of housing. Instead, it results in inflating, that's another word for rising, housing prices and rents. And this leads to a disconnect between housing prices and rents on the one hand and income on the other, as we've seen at the beginning of my presentation. Affordability declines, and to some extent, we may see displacement of vulnerable groups. What is also important, this is not something that the market does and the state is a bystander. Actually, these processes are to a large extent enabled by the state. These real estate investment trusts, like the purple ones I showed you for Germany, where the pension funds have their money in, this is only possible if regulation has been introduced at the federal or national level. Similar securitization, this reselling of mortgages, is only possible if this has been regulated at the national or the federal level. So we need to do something about it, and I'm sure there's going to be some questions about that. So I skipped that slide, also because I don't have time to do that anymore. But I just want to end with this one single statement that housing, or shelter in other words, is a human need and a human right, and we should therefore treat it as such first, rather than primarily as an asset. Thank you very much, and sorry for going over time.
Thank you so much, Manuel. Before we move on to Hwanhee, there was a clarifying question in the chat. If you could answer it in the question and answer. Basically clarifying like liberal in the context of the classification you mentioned, is that referring to neoliberal policies in those states? In the typology, the
I would say in this typology, you might see neoliberal policies everywhere. It's liberal state welfare states in the sense of welfare being mostly left to the market, the government being a regulator of that market, but the government intervening less directly. Whereas in the second, there's more direct intervention, and in the third, there's significantly more intervention to keep it a little bit sort of on one dimension, the explanation.
Okay, thank you so much. That was an incredible presentation, and I'm sure there'll be lots. I know I have a lot to ask when we get to the question and answer session. But first, we have another excellent presentation by Hwanhee Bae. Hwanhee is an economics PhD candidate at SOAS University of London and Knowledge Transfer Partnership Associate for SOAS and GFTU, funded by Innovate UK. As part of her role, she develops and delivers educational courses on political economy for trade unions. Her research interests are financialization, housing, pensions, welfare, and political economy. So, Hwanhee, I'll take it to you.
Thank you. 1 second, let me highlight myself. Alrighty, I'm being the Zoom host as well as a. All right. There we go. Hi, everyone. I'm Hwanhee. You may have seen me multiple times already, but it feels quite different to be here as a speaker. I'm quite, Manuel's presentation was really interesting. There was so much to unpack and like a lot of points that kind of connect to the points that I want to talk about. So we decided to split the topic. So Manuel spoke more on housing, and I will focus on pensions and its role in the welfare regime, which has frankly like broken down in many ways. It's interesting. Pensions is an interesting one. I think a lot of people find it like one of the most boring topics, especially like if you're not close to retirement right now. And I've developed this speech actually like years ago when I did a teach out when the UCU, the University College Union here in the UK was striking in 2021. And the fight was largely about pension cuts and the slogans were everywhere. We've got like 35% cuts to our pensions. And I thought, I'll delve into how exactly that's happening. Like through what mechanism are we losing 35% of our pensions, right? And like when I asked around, it seemed that not many people actually understood how that was happening, right? And I think that kind of encapsulates a lot of the stories that's happening to our pensions, like what pension funds are doing, but pensions in general, it's really complex, kind of hard to understand, and therefore I think it hides a lot of the sort of mechanisms through which like capitalism like perpetuates itself, and the financialization and so on and so forth. And I'm not just talking about what the pension funds are investing in. It's far I'm trying to talk today more directly about how it's impacting us. And so before I get into like the nitty-gritty details, I want to start first by asking a quite fundamental question. What is pension? Why do we need it? And who should pay for it, right? And pensions are inherently a capitalist institution. I'm not saying it as like, oh, capitalism is to blame for everything. Like, no, really, because with capitalism, there have been two sort of very major developments that happened. First of all, self-subsistence has gone out the door. Like before capitalism, like under feudalism, for example, as peasants, you work a couple days of the week, let's say 3 days of the week for your feudal lord, and then remaining 3 days, if you have some day off, 3 days of the week for yourself, right? So during these 3 days that you work for yourself, like whatever you produce in these 3 days is yours, right? That's the basis for self-subsistence. Whereas under capitalism, the whole economy became market-based. So what happens is that it's called commodification. What that means is that when during your working hours, whatever you produce within these hours, the outputs belong to your employer, the capitalist, because the means of productions were the employers, right? What you get as a worker instead is a pre-agreed amount, which is the wage or salary, right? And what you then have to do is to take this money, go to the market, and then purchase the things that you need to sustain your life, right? And another development was the fact that there were a lot of technological developments happened under capitalism, and that meant that people started to live longer and longer. And the continuous increase in life expectancy, combined with the eradication of self-assistance, began to bring about some problems of old age. By early 1900s, employers started to notice that their workplaces are full of old workers who are too old to function as fast or as efficiently as they used to like 10, 20 years ago. And they couldn't simply get rid of them, right? And like, remember, the jobs back then were mostly blue collar jobs, like very manual, like hard work and like physical work. And they couldn't just get rid of them because what are the workers going to eat afterwards, right? It's not like they can go back to the farm and start producing their own food, right? So actually, the private sector, the employers began to offer pensions as an incentive to retire to their workers. The deal was that during your working years, you put aside a chunk of your salary and as employer, will match or double whatever percentage is, like will also put aside some amount of money. And when you retire, when you finish your working life, then we'll pay you a certain amount of money each month, like salary, right? So in this sense, pensions are workers' deferred pay. I think this notion needs to be really clear. It's our deferred pay. And this development seemed like a win-win for everybody. The workers, the workers could retire and enjoy their senior years, and the younger generation got more job opportunities, and the employers could enjoy higher productivity. And the trade unions also very much welcomed this development because they believed it was good for their wage negotiation, because there would be less elderly men who would work for substandard wages. And this developed this trend continued, and by the 1950s, it kind of became the very basic entitlement. Pensions became the basic entitlement that, everyone would expect from their employer. And remember, like this, the 50s and 60s, this was the time, the day for the working class. And the working class, like, and the trade unions began to demand more and more radical things. They began to demand more control over their workplaces, and even for a wider economy in general. And the capitalist ruling class, the state, were completely frightened. And one of the like demands that they could adopt, yeah, they could like sort of give into, was universal old age pension that's not means tested, because the pension as it began was tied to your employment, right? And who gets left out in the deal if pensions are purely occupational based? It's the people who are in unpaid work. So a lot of women who work, domestic labor, reproductive labor, were excluded from this pension deal, and they were forced to be financially dependent on men. And increasingly more and more, the informal casualized work, like undocumented like migrant laborers, got excluded. And these days, frankly, just a lot of young generation, because a lot of the works are just completely casual and independent contractors, all that sorts. So yeah, by the 60s, a lot of the states in like Western Europe and the wealthy countries, they began to offer the states began to offer universal age. Like, what counts as universal? That's quite like debatable and complicated, but by now, like most states had some sort of like base. It's not that they replaced the occupational pensions, it was added as the very basic need. It was, in other words, the working class began to see this as a basic need, like as Manuel mentioned about housing. Pension became to be noticed as what the state must provide to its citizens, right? And it was now we kind of like go into, I want to kind of now talk about like different ways the pensions are funded, how they're financed, right? Like how do you finance this? Um, Most sort of like basic rule of thumb is that a lot of the state pensions are so-called pay as you go. What that means is that the current elderly population's retirement income, the pension that the state gives out, is funded mostly by taxation. What kind of tax depends on the country. It can be payroll tax only, or also it can be like, some all sorts of like other taxes as well. But most of the state pensions are pay as you go, because the state has the power to sort of tax. And the social contract is that, as practically the current working population is funding the current elderly's retirement income, the promise is that through the state power, the future generation will do the same for me, right? Um, and this was the norm, and then like occupational pension scheme, like so what's tied to your employer, was kind of complementary. But then, as we all know, like the economy, which was booming, population was increasing in the 50s and 60s, productivity was increasing, but then like 70s onwards, you start to see stagflation and so on and so forth. And everyone knows the main culprit of everything, neoliberalism enters, right? And there has been a trend in even in pensions, and I think this is something that's went very under noticed compared to like other types of privatization. Um, Probably because it's so complex, and like people don't often think about it until they are really close to retirement. But basically, the IMF, the World Bank, they, institutions like them, they started to really push for the Anglo-Saxon model, which are largely based on individual savings, prudence, individual responsibility, and like financial literacy and things like that, as opposed to the continental European model of more basic universal provision. And the quite seminal paper, the Averting the Old Age Crisis, in 1994 was produced by the World Bank, basically highlighting that this pay-as-you-go scheme, basically paying out retirement incomes for the elderly now by taxing the current working workforce is not sustainable, they said, the World Bank said, because the population is not increasing as fast, or it's going to decline at some point, and the productivities aren't increasing as much, and this they even basically called it a Ponzi scheme. And so the in the UK and the US, Australia, like in the Anglo-Saxon countries, like basically majority of the pensions are completely privatized and individualized. And I'm going to explain what this means, what it means for a pension to be individualized. So before I was talking about how to finance pensions, and the pay-as-you-go by taxing, that's only available to the state. Whereas what the employers were doing, when they started the pensions, it's called funded pension, because you have a pension pot, the money goes into this pot and obviously it gets invested. Now the pensions, so the states began to reduce the universal pensions, the old age pensions, and then bring in like means test and so on and so forth, and basically started to push individuals to save for their own retirement as an individual. And the main method was basically mandating, I think, except for a few countries, like mandating employers to offer some sort of pension scheme, and um, providing the tax benefits for pension savings. And so currently, when I did the research for this speech, like in the UK, I realized that just how much privilege I had as part of a university superannuation scheme, which is called USS. That was the kind of going back to the beginning of the story of the pension dispute. And that dispute actually sums up the whole trend that has been happening. So there are two ways where the pension determines how much you will get paid after retirement. There is defined benefit and there are defined contributions. These are the two major, and then of course there are hybrids, but you can ignore them. They sound complicated, but it's very simple. Defined means fixed. Benefit is the money that you get after retirement. Contribution is the amount you put aside during your working years, in the every paycheck. So defined benefit was the norm when the pension first came about, when the employers promised the pensions to the workers. Defined benefit means that you may contribute different amounts, the amount that you put aside during your working years may slightly go up and down during the years, as they re-evaluate the value of the pension pot. But what you will get after retirement is fixed. And that is the employer's responsibility, right? And it's their liability on the employer's balance sheet. So they absolutely hated this scheme, and especially since the Thatcher and Blair and all these reforms, the states made it really easy for employers to switch their pension schemes from defined benefits to defined contribution. What defined contribution is that you put aside a fixed amount each month during your working years. However, what you get after your retirement depends on the investment performance of your pension fund, or of your pension pot, right? This completely individualizes the risk, and the risk is now completely on the employee, the workers, rather than the employers. And the figures I've seen was quite shocking. Like in the UK currently, um, like almost 90%, like around 90%, like 90 of the workers are covered by DC defined contribution. In other words, all the risk is theirs. Like, what they will get after retirement completely depends on the financial performance of their pension pots and the pension funds. And the defined benefits scheme basically died out completely, except for very few sectors like the university lecturers or the NHS or teachers' pensions, public servants' pensions, things like that. And I've noticed that this has been the trend in majority of the countries, especially in Anglo-Saxon countries. The like the 401k in the US is also completely employer based. It's not even sectoral like my pension scheme. Like it's completely employer based, completely individual defined contribution, i.e. all the risks is on the worker. And very few defined benefit schemes and are like industry-wide, sectoral, or like, state funded. These only apply to like very small portion of the workforce. And I want to kind of finish by pointing out this funny thing that I've come across while researching pensions. In the 1970s, Peter Drucker, who is a really big figure in like business management field, like, it's a very, very big name. He wrote a book called The Unseen Revolution, I think, basically arguing that how that the society pension fund socialism has arrived to the US. That was his argument, as pension funds became so big and they've become the major shareholders of almost all existing companies on the US stock market. He basically argued because pensions are workers and they own the shares of the companies, it's socialism. That's what he argued. Um, and he was scared of it. But it's really funny, I think, because who here feels like they actually have control over where their pensions are invested, uh, you know? And I think it's really evident in the way that, like, for example, there's been like numerous protests for Palestine and the BDS. There's been so much demand from below from workers to divest, but that has barely been happening. And I think it really shows that rather than leading to socialism, pension funds are just further alienating us from our own deferred pay. Thank you.
Thank you so much, Hwanhee. That was incredibly fascinating, potentially alarming, and lots to think about from this presentation as well as the previous presentation. So we'll be now moving into the question and answer session. I'm going to abuse my position as a chair to ask a few questions to begin and to start the discussion going before we go to some of the questions in the chat. We have quite a few that are starting to come through. So one thought that immediately comes to my mind when listening to both presentations is how pensions manifest themselves both at a systemic structural level, for example, through the pension funds, as well as at the individual level through what you were talking about in terms of how pensions have made things individualized. And so I wanted to get a sense of from both of you about what the implications are for someone that's like aging now and trying to think about these things through a little bit. Where do they start piecing together how much individualization has affected their ability to like navigate these systems that you talked about? And like how does one sort of go about trying to understand this broad issue as a whole?
I think one thing to mention first is that yes, everything is individualized, but a lot of people put their money in an index fund or in an exchange traded fund. So that basically means that rather than making individual choices, which is sort of the neoliberal ideal, people pick their own stocks and spend time doing this. Most people say like, yes, I want to do this individually, but I don't know anything about this and I don't have the time to do this. So I put my money in an index fund, and that index fund, what it does, it traces an index, as the name suggests. So that might be all companies over a certain capitalization in the market, and they put money in there. Or you have specific index funds that put their money in real estate. They also exist. But most people will pick a very general one. And that means the general fund will invest in all kinds of industries, also industries that you probably don't want to support, companies that you don't want to support. So that's the same problem if you have a collective pension fund, right? A collective pension fund, they might also put their money in things you don't understand. But then collectively, as workers, you can put some what you can say you can influence those decisions. You have a say in most countries. Workers have a partial say at least about what happens with their pension funds through labor organizations, through other means, sometimes to directly to the firm, depending where the pension fund is organized. So there's something you can do about it at that level if you don't have an individual pension fund. If you do have an individual pension fund, I would say don't blindly put it into an index fund, because, yeah, if you don't know what they put their money in, that means they also put their money in all kinds of shitty things. So, yeah, you probably want to consider that twice. And I'm sure I don't have an individual pension fund, so I never looked into those. That's not something that's common in Belgium or in the Netherlands. Most of them are run for an entire sector or for part of a sector, typically not for one company. So I've never taken the individual route, but I'm sure there are specific funds that put their money on all kinds of different things, but they would trade sustainable funds, or they would not put their money in the financial sector, or not in the arms industry, or not in companies that deal with Israel. That could be a concern for other people as well. So there's all kinds of different concerns, ethical concerns people might have. I'm just mentioning a few. I think the most common one typically are sustainability issues. And I know funds exist for this. I'm not sure to what extent this is targeted at pensioners to do these individual funds, but luckily we have someone who might know about this.
All right. Let me clarify your question before I answer. So your question was like, if I'm close to retirement, like, what's the advice? Advice, and what can
It's less that, but it's more that like you've talked about how pensions are presented as this individualized responsibility while having social structural implications.
Yeah.
And that tension between these two things is something that's difficult for an individual to navigate. And so what are your thoughts on that?
I see. Yeah, where Manuel pointed out, like individual or otherwise, it may still, yeah, be kind of similar. Yeah, I totally get that. Ah, I think I don't know if I have like really good ideas on that, but you know what? When I was like reading, actually, this is a book I kind of like read, like a Bible on pension research. It's banking on death or investing on in life. But uh, so historically, I'm like really surprised by the demands that the trade unions used to make. And like I think it was like 50s or the 60s that the unions were demanding that like the pension funds be used for like housing associations, like building associations in within the local community. And and that kind of ties the housing and pension together, right? The problem now, the fact that a lot of pension funds are invested in housing is is kind of like, yeah, it's making affordable homes less affordable, as Manuel said, right? So we want more affordable homes, and pension funds are huge, and like we have the money, and I think we can do that rather than like letting the big property management companies to just demolish social housing and then build more and more high-rise flats and like luxury mansions. That's one way, and yeah, and like it's really important to note that pension funds, like, yeah, as much as we hate this where they are currently invested, as our demands be more radical, it's also a source where we can, where we should head to, like where we should invest in the long term as well.
That seems like a great response to a lot of like the abundance discussion around that's like sort of growing in the US. And so my next question would be that do you see the implications of, so for example, like if we were to move towards a situation in which workers are more in direct control of their pension systems by shifting back towards a DB system, for example, but at the same time also retaining ownership of the pension fund in some capacity. Do you see the limit? Do you see the ability to, do you see that as being beneficial to the larger goal or the larger intention of regaining some degree of control over the means of production as well? Or do you find that to be something that needs to be sort of looked at simultaneously? What I mean is that like in the earlier discussion that you talked about where pension funds could be used to like be allocated towards social housing, in a situation where like the process of development of housing is still not owned or like there's not a strong degree of ownership by worker collectives, that there may be limits to that kind of approach. I don't know if what I'm asking makes sense necessarily.
Um, yeah, I think so. So like you're asking like basically, is it a good thing that the trade union has or like workers has some control of their own pension funds and how concretely that can be implemented?
I think what I'm asking more is that enough? Or is
Mm.
there more that needs to be done to make the pension system work in our favor?
To me, I think like this. I first of all think like pension-wise, reinstating the defined benefit schemes and like again there's more details like it used to be tied to people's final pay, but then they also trend has been that it's now tied to average pay and so on and so forth. But I think first we need to start by reinstating defined benefit pensions to the wider society, not just limited to a couple of like sectors. And the I think the state's universal pension coverage must be much higher than just like 50% and then rely on the occupational scheme. Um, and yeah, I think that's that's of course like within capitalism and it still like has limits. And but yeah, I see that as a starting point, first of all. Yeah. And
Manuel, do you
uh,
have any thoughts?
yeah,
I,
sorry.
I don't think I have much to add to this. I would assume also it was a starting point, but I don't know so well the pension fund part of this. The funding, yes, but not the policy side so much.
Yeah, I just kind of wanted to quickly add, and also like in terms of the state pension as well, like they're saying that oh it's not sustainable, but I think our like minds has also been limited. Like why does it only have to be payroll tax that we pay fund pensions? It can be wealth tax, right? And again from this book, if I remember correctly, Tony Benn in the 80s argued that the revenue from the North Sea oil must be used to pay out pensions to the workers. Why can't like we need to think more like the taxation must be different, and we need to kind of get out of the mindset of everything. The high tax just means like high income tax, like things like that. Yeah, that's another starting point, I think. But yeah, I don't have like a whole answer.
And my final question before opening up to the many questions that we have under the chat is the classic question of what is to be done in terms of everything that we've discussed. Of talking about pensions, like regaining direct benefits as like a starting point. But Hwanhee, as you mentioned, there are potential limits to focusing on the conceptualization of pensions as deferred wages, rather potentially leaving out people who are unable to work, for example, and also the potential for that approach pitting one class of worker or one section or one industry against another, which often happens in the way that unions have developed, at least in the US in the recent past. So my open question to both of you is like, what are the implications of both your presentations to um, the ongoing process of organizing labor in response to these concerns?
Do you want to go first, Manuel, or?
I could, and I'll keep it short. In a way, I'll refer to something I said earlier. I think in the case where there's still pension funds organized at either the firm level or the sector level, they should really get back that influence that in many cases they used to have much earlier. They should be a louder voice, and they shouldn't take no for an answer. And no these days often comes in the form like, yes, but we're trying to get you the highest return on investment. Um, that sounds very attractive, but I think that's not a sufficient answer, and I don't think it's always true.
Yeah, I think I've already kind of said all my points on like what is to be done. Yeah, but I just want to point out that like it's really it shows a strong correlation with the working class power, like the union density, like the coverage of collective bargaining, and the direct correlation to the pensions declining and worse individualization of it.
Um, Thanks so much. We'll start going through some of the questions in the chat. And we'll start with this very important question by Professor Yabuz, which is both presentations seem to be centered around the core, or call it global north or Western developed countries, mostly Europe, with occasional touch on the periphery, um, where the story has unfolded quite possibly very differently. Despite the historical, social, institutional, etc., differences between the core and periphery, can we say the latest phase of capitalism has homogenized the global globe in terms of housing, pensions, and even healthcare system?
I would not say homogenized. I don't think there's a homogenization taking place. Very often people talk about globalization. They also understand this in terms of homogenization, but I would say globalization is a process like capitalism that exploits existing differences and erases some of the differences in that process and creates new differences and distinctions within that process. And I think the same is happening here. I think it's true we talked more about core countries. Also, not all countries in the global south obviously have pension fund systems. But I think an increasing number of them do, or some of them have quasi-pension fund systems, where something is not officially a pension system, but it might be organized through a provident fund. Brazil, for instance, has a massive provident fund, which is a federal fund which takes in employer and employee contributions and is one of the biggest investment vehicles in Latin America. So funds like that exist, and they also tend to invest in real estate. This particular fund in Brazil also happens to be not only the largest quasi-pension fund in the country, it's also the largest real estate investor in the country, and its subsidiary is the largest mortgage lender in the country. So in a way, I would say what we see in Brazil is an organization of real estate, finance, pensions, even more tightly knit together than we actually see in many Western countries. I'm not saying that's a typical scenario for the global South, but I think in some middle income countries we see something like this, although the Brazilian case might be still quite an extreme example. It's a very clear example in that case, though. So as I was saying, like a lot of these developments we see now popping up in middle income countries, not necessarily in less developed countries. But it is something at a much lower level. So I don't think it's going to erase these differences between global north and global south. What we also saw, especially in the global financial crisis, that capital was being moved from the global north to the global south, but of course it went to select global south locations. So in that sense, that didn't mean that those places became more similar to the global north, but that they started to see similar types of capitalist development. But then they interact with existing levels there. They interact with informal economies. They interact with the fact that they tend to be lower labor cost countries. So that gives all kinds of different patterns rather than sort of recreating the global north and the global south. But we do see the process of financialization there. We do see processes there where pensions get more tied to financial markets. I think those things are true without necessarily making them the same. It's a very long answer, and it's even still a very partial answer.
Hwanhee?
I hope my answer is not longer. Yeah, actually, my primary research focus area is South Korea, where I'm from. I don't know if it counts as global South still, but that question aside, one thing I noticed is that because we're talking about the welfare regime or like the welfare state or the demise of it. The thing is, in the global south, there hasn't really existed such a thing as welfare state because it's a consequence of developed capitalism and the working class fighting back to the various problems of capitalism being in advanced stage. So it kind of like I yeah, like welfare system that we know as in the West is kind of like an accumulation of like very ad hoc like measures that put together and then kind of like worked out as like, oh, okay, these are the minimum things that we expect the state to provide. And the yeah, I must say that the South Korea's national pension fund, it's a national occupational scheme, but it's run by the state. And it certainly has the similar tendency of like investing less in less in bonds and more in equity and moreover like the other category, which are real estate investment trusts and the various derivatives project instruments. And I don't know too much about pensions in other countries, but actually on housing, something I noticed is that um, something called pre-sale basically is like buyers start paying money to the developer before it's the building is completed, right? That's a really popular scheme in South Korea, and I realized that it's being promoted in the global South, like countries like Kenya, Nigeria. I've seen lots and lots of papers, people arguing that this is the way, it's a way to mitigate the circumstance of like we lack the capital, there is not enough capital in the country, so the buyers can like get discount by paying early rather than 3 years later, assuming that the house price will go up. The buyers can benefit, but also it's a social risk sharing model between the developers and housing, and then increase the housing supply ratio by sharing the risks. And it's an incredible narrative of like individualizing the social provision of very basic needs, like just basically passing the burden and the risks onto individuals. So I think like maybe it's not a rollback of the state. That's quite a different pattern to the West from the West, but the direction we are going, I would say, is kind of similar. Yeah, maybe the details are different, of course. Yeah, that's my opinion.
Thanks so much. Yeah, I can say in the case of India, both of like the discussions that both of you have raised are incredibly relevant. The interaction between like global financial capital and informal markets in India and informal labor, the implementation of like privatized neoliberal individualized pension systems for the large scale gig economy and the impact that it has on individuals not being nearly what was promised, and the scope of labor actions being reduced as a result, and so on. So a lot of these discussions are very relevant, and potentially something to get into more in details as we go on. I'll go on to the next question by Professor Ronald. The typical picture of gentrification is pioneering adventurers, and it looks like, Manuel, from your data, that it's REITs. So the question is, can you differentiate the fate of the dislodged poor by investment type?
Yeah, that's a very good question. So I'd be happy to answer that. I saw that question and I hope you would pick it. So I think the idea that gentrification is done by pioneers, I think that is like almost like a romantic image of gentrification that maybe was true in the 60s and 70s. In the 60s, the term was invented by Ruth Glass in London, I think 63 or 64. That was very much true at the time, but already in the 70s and 80s, people started to discuss that the main actors were actually real estate sector in doing this. Then in the 1990s, you get a discussion about how the state is actually key to doing this by putting investments in specific places, having specific policies in place. And then a famous paper, either 1999 or 2001, they speak about state-led gentrification. Some years ago, I think 2019, I call it finance and state-led gentrification, because I think the state is still very important. And as I said before, the state is not separate from finance. But now finance is really key. That doesn't mean that you don't have these pioneers anymore. You might still have pioneers, but that phase might be very short, where you have individuals coming in, not just residentially speaking, also individuals owning like a little coffee shop run by, the local hipster. But after a while, those become more already corporate coffee places. Then at some point they become national chains, they become international chains. And the same is true for the housing developments in some way. Yes, there might still be some people who pioneer in a way, although I think the word pioneering there is also quite confusing because, or maybe problematic, because poor people have lived in a lot of those places for years. Maybe they were the real pioneers. Maybe when they moved in, when middle class didn't want to live in those areas anymore, they were the pioneers. So also that in a way is part of the romantic picture, like, oh, those people are taking risks to live in those neighborhoods. Well, yeah, if a specific class of people does that, we sort of talk about it, but other people, yeah, they were already living there typically. In most places, they weren't empty neighborhoods. That's quite rare, in fact. So is it possible to really see the effects of who are the individuals there and what is big capital coming in? That's not so easy because it's often also very mixed. And people might also say like, oh, but it's all local actors doing it. So I recently had a discussion with a Hungarian colleague, and we were talking about one of the most gentrified districts in Budapest, where she's from. And she said like, I know for a fact that all the main actors there are either from Budapest or somewhere else in Hungary. So I said, who's the biggest developer involved there? So she said, this and this one. It's all Hungarian. I looked it up. She's right. It was all Hungarian, the developer. But it had bonds with 50 different institutional investors. Not necessarily for that particular project in that gentrifying neighborhood where they really developed like a kind of a mall and also with a hotel and apartments there. So really a big development. Those investors, those bonds could be for anyone else, but that capital was behind it. So it's also, there's often a blurring of forms of capital taking place. We have national capital being blurred with international capital. Also in Central Europe, I did a study on Romania with some Romanian colleagues who asked me, and they said we see the same malls popping up in all these secondary and tertiary cities. We're not talking about Bucharest, we're talking about the cities sort of one or two levels lower. And it's all done by a national developer. Where do they get all the money from that they can develop like 25 or 30 different malls all over the country? So we looked into it. And the biggest investor behind it there was a South African pension fund. So they were thinking it's money from France or Germany, maybe from the UK or from the US. Well, some of it was as well, but the biggest investor there was a South African pension fund. So it's not all REITs. REITs don't necessarily buy up the kind of housing in gentrified neighborhoods, also because they're quite risk averse. And this is actually a bit of a risk because gentrification may take some years to take off. And in those years in between, you might actually not be running a profit. But yeah, in other neighborhoods, it might be these kind of factors, but there's definitely bigger capital involved. That sometimes is global capital, sometimes is national capital, but it's still financial capital. And if it's global capital, as I said before, it's often run through the city of London or Wall Street, but that doesn't mean that's American or British money. That's very often money from somewhere else. But yeah, to then see how to differentiate what the displaced poor, by whom they would be displaced, often they would be displaced by a combination of factors, I would say. It would be very difficult to say like, oh, this is global capital and this is a local capital involved here because they are that's such hybrid forms of capital, I would say.
Thanks so much. And I think this next question is also primarily directed to Manuel, but obviously, so if you have any thoughts on this, what are the main ways that the government can regulate investment in housing to avoid the problem of extractive business models, which don't result in actual increased supply or quality of housing? Are there any countries or models which which do this well currently or have in the past? Manuel, you're muted.
Yes. I was trying to share my screen and then at the same time I wanted to unmute myself, which was a bit difficult. But I'm not going to put it in presentation mode now, but you can see the slides. So this was the extra slides I had made. So there's many things that can be done. I always say to people in policy, they ask me like, oh, what can be done? And preferably not something that's very expensive. I always tell them the easiest thing is to properly regulate your private rental sector because it doesn't cost you anything. You can come up with something now and implement it next year. Well, probably December 10th is too late to do it January 1st, but you can do that within a year. You can have proper regulation in place to regulate the private sector. I don't think in most places there's political will to do this, but you can regulate how much rents can increase per year. And then often the argument is like, oh, but we don't want to scare away investors. Well, as I said, most of those investors buy existing housing. So if you're scaring them away, it just means that housing won't be sold to another landlord who will then price it up. It's not a problem. If really landlords will massively start to sell housing because they think it's overregulated, well, at some point then the prices go down, and maybe people who want to be homeowners and wouldn't be able to afford being homeowners otherwise can have that. Most governments want to promote homeownership, so that would also be great. So that wouldn't be necessarily such a big problem, and it doesn't cost anything. It doesn't cost any tax, euros, dollars, or pounds, or whatever you want to put it. I think another one that's very interesting, but is very much underexplored, is to limit monopolies when one landlord is dominant in a particular market segment. For instance, they're dominant in rental flats, they're dominant in a particular neighborhood. So we talk a lot about free markets, and also, this is a very popular topic on the right as well. But if we actually want free markets, if you look historically at text about how you get free markets, is not to have monopolies. I think now in some places we have quasi-monopolies. So even from a very sort of pro-free market standpoint, you would have to do something about monopolies because they are the opposite of free markets. I think then there's another thing that governments can do, typically at the local level, is to use their land use and zoning powers, also sometimes known as proactive government powers. So they can, for instance, ask to require affordable housing inclusion. You can say 30% of all the units here need to be affordable. In some places, this happens already. In some places, they really ask for social housing or public housing. In some places, they just say, oh, it needs to be affordable, and affordable is 10% on the market. Well, 10% on the market rate in most places is not going to do much. So you need to ask for something more substantial than that. Simply stimulating construction is insufficient. This is what's done in many countries. But if we actually look at many places there, they've built a lot of housing. Typically, housing prices go up in those places, and sometimes even more than elsewhere, because it might have an effect of stimulating the whole market. So governments can also stimulate less or non-financialized forms of housing. You can think of, old-fashioned public and social housing, but you can also think of housing cooperatives, community land trusts, tenant collectives, housing associations. There's a lot of things we can be doing. If we don't do this, we won't have a status quo. I think what we actually have is the situation getting worse and worse. So the longer you wait, the more problematic this is going to be. So yeah, this is again not a very short answer, but it was a short question, but it's one where a lot happens. A lot is being done. So Austria is typically an example that people look at, particular Vienna. Vienna has a lot of affordable housing. It regulates the private rental sector. Generally, German-speaking countries, but also the Netherlands, they regulate the private rental sector quite a bit. Not always enough, but I think that is a very easy thing to do. Zoning powers are being used again in some of those countries, also in Scandinavia. There's particular cities in the US who also do this. But also, there's cities like Auckland in New Zealand that also do this. So there's many cities who do different things, and I think you can learn from them. Barcelona is an interesting one as well, where they try to do some of these things. So I think there's many, I don't want to call them best practices, but there's many cities who try to do something. Also regulating Airbnb. There's a new book out. Claire Colombe is one of the authors on regulating short-term rentals. That's a comparison of a whole range of cities, and they all have very different policies, and some work better in one place, some in the other one. So also there, that's something you can look into. And I could go on about this for another hour, but I won't.
We lost Karthik.
I was just gonna say, I think we lost our chair.
Oh, he earlier said like he has some like internet issue.
Okay, you want to pick the first question for next question because you probably had some time to go to.
I wasn't actually looking at other questions.
Okay.
I don't know if Hanin can help me out, but just to fill the gap, actually, policy-wise, in South Korea, I think the regulations on the rental market is
Mhm.
is stricter, right? I would say
Okay.
than the West. But then I cannot put it out as a like a best practice or like any good example because like it's a very country specific scheme
Hmm.
and that's also it's interesting because like the as the government regulates the specific rental market but
Hmm.
also the state themselves provides a lot of loans, and that loan for this peculiar rent is like a workaround for strict mortgages. So it's another bad example, I would say.
Right.
I think we have Karthik back.
He is back indeed.
Yes.
I'm so sorry. Am I audible? Sorry, my like laptop just
We can hear
crashed
you. Yeah, we
suddenly.
can hear you fine. I just will
We filled the time.
fill the gap with.
Thank you so much. Yes, before my laptop died, there was a question on imperialism. I can't see the chat, but there was a question on welfare states and imperialism that I thought could be an interesting one to just briefly get into in the Q&A while I just pull it up.
I see it now. George, to what extent did welfare states depend on imperialism? Can this explain why welfare states arose only in the global north and have eroded since? I'm sure the short answer is yes, they probably did to some extent. I think there's actually a good book on this, but I've never read it, and I can't remember the title or the author, but someone did work on this topic.
Um, I think, I mean, I think yes. Again, like I don't know, I can't really like give like very detailed like numbers and so on, but actually with the pension, the very beginning, like even before like in the 1900s, employers began to offer it. The very beginning of the pensions was in the imperialist time. It was born out of like military rivalry between the imperial nations, as a so the states it was mostly for soldiers. They promised a like piece of land after they retire because it was such a unique profession where it's like really risky, and so well, the difference is that the pension back then, like before capitalism, wasn't a form of cash because it wasn't like a market-based economy. It was a means of production, and but of course, yeah, like the current yeah, the running of welfare states, like um I do think it does hinge on like the global supply chain, like the capital in the global north, like super exploiting the workers in the global south, and then like that's kind of um how do you say, the sort of the benefit kind of trickles down a tiny bit to a certain class of workers in the West, but yeah, yeah, that's it.
Yeah, thanks so much. I thought it would be interesting to get into that as like a connection to the larger conversations we've been having in the previous sessions. There was a question about I'm so sorry, I've lost the entire Q&A section. There was a question earlier about the Matsukato question and
Oh,
Australia. I thought maybe that would be something
I
interesting to talk
see
about.
that it's at the
Yeah.
top. Yeah.
Yeah.
Should I read out the question?
Yeah,
And
if you could read out the question, that would be
yeah.
great.
In Australia, there's a push from the current treasurer and acolyte of Matsukato and her vision of state entrepreneurialism and like-minded others within government to redirect the enormous pool of superannuation funds toward state priorities such as decarbonization initiatives, etc. This has raised the ire of conservative commentators in being a potential breach of fiduciary duty, i.e., endangering people's pensions. Given that states seem to be perennially short on funds, especially for social purposes, do you agree that pensions could and should be redirected in such a manner, or should they remain focused on extracting maximum returns for individual workers? What of the implications for regular old taxation, etc.? Oh, I like this question.
I would say, in short, yes, they should redirect it. I'm not sure the way that's being proposed in Australia is the right way because I simply don't know anything about that policy. But I think this is what a pension fund should do. It shouldn't just blindly put it into wherever you get the highest return on investment. You should do something useful with it. And also think of the effect you have on your own pensioners. Like in Germany, like 3 million housing units are now owned by these real estate investment trusts. So a lot of them are inhabited by people who have a pension. A lot of them are inhabited by people who are saving for their pension. So they are paying more in their rent. And then some of their rent can go back to their own pension fund, who then says like, oh, we can give you more per month now. But maybe they wouldn't have to give them more per month if their rents wouldn't be going up. So maybe there's actually a way of making some of these links, cutting some of these links or making them shorter. And you could be investing in things that would be benefiting your pensioners or your workers or both of them. So I would say you can even make it more direct than what I understand is being proposed in Australia. Uh, I would say that's even a duty to invest in an ethical way, in a sustainable way, etc., etc. And then we can have a long discussion about what that exactly means. Also, there are sustainable investment funds, and some of them do better than the average market. I don't know if that means that they're only quasi-sustainable, because I don't know enough about sustainable investment funds. But a sustainable investment fund doesn't necessarily mean investing ethically doesn't necessarily mean that it's less profitable. So I think that's also a mistake that's often made, like, oh, that those must be less profitable things. They're not necessarily less profitable. Yes, it's good to spread risk. So you could also say like, well, there's different kind of sustainable funds. There's different types of ethical funds. Or maybe you say like, we put half of our money in those and we put half on it, anywhere else generally in the market if we think that's too big of a risk. Maybe that's something to be debated. I'm not saying that's the solution, but that's, I think, something to consider.
I entirely agree. Like it's really important to point out that whatever is ethical means like low profits. It doesn't really have to be that way. And yeah, yeah, again, like there is this like moral and ethical question of like do we want our like deferred pay be funding the genocide or like like oil and gas industry and things like that. Um, but yeah, I think I think to me it makes more sense that like yes, as I argue that state needs to provide more pensions and like don't let people rely on the occupational scheme, which are far more like privately controlled. Um, I think we should start from like wealth tax, like using wealth tax, like taxing more on wealth and using that to fund pensions. And I think, yeah, I don't know, it's a difficult question, but I also think that like the a bit more like decentralized system of like pension funds could be useful. It's not like I've done a lot of research on the alternatives, but at least from what it seems from the past, like trade unions' demands on like if when they wanted more control over their pension funds was more based on like a local community level. And I think it does make sense that like workers like who know their communities like could reasonably make um they would know like what's needed in their local community, and it's kind of like the local like pension fund can be used to provide what is needed in that local community. And especially as if like a lot of like local councils in the UK are like, like basically broke and stuff, like I think it could be a useful source for a long-term investment.
That is some very, very important, very useful context setting and responses. And there's a connected question, I guess, that I think could be worth expanding a little bit more on, which is actually there are two, I think, connected questions. So in the case of pension funds, they're very heavily regulated. And so does the state have the means to force massive investment in specific sectors by directing pension funds into specific sectors or even exclusions? And then on the other side, in terms of the individualized pension system, have there been cases where people have organized around their individual pension to invest in the decommodification of any sector? Or I guess relatedly to like direct investments towards investing into specific sectors? Yeah.
That's a question for you, Hwanhee.
Um, the Actually, I know I can answer from a South Korean case. The National Pension Fund is run by the state. I'm sorry to bring a bad example. The whole reason why I got into the topic of pension was actually going into this rabbit hole of in the 2000, I think 15. Basically, the National Pension Fund was like involved in a whole scandal that eventually impeached the President Park in 2017. That the National Pension Fund, so in South Korea, the National Pension Fund is actually the largest shareholder, or like at least top three shareholder, biggest shareholder of most of the enlisted companies in South Korea, because it's a mandatory occupational scheme. Like it's huge, like it's the third largest, like after the Norwegian and Japanese sovereign wealth fund, I think. And basically, Samsung bribed the president, and there has been a push to the Minister of like Welfare, blah blah blah. And the National Pension Fund aided Samsung to inherit the entire group from father to his son at a huge loss to its own funds, right? And then the most detailed information I could find was actually one of the victims, who was another pension fund of the of the U.S. Pensioners. But anyway, this is a bad example. However, the I think the state having a sort of direct control over like where the pension funds should be invested, I think it's not perfect, but it still is better than a completely private control. And again, it really depends on which country we're talking about, because like as I said, like in the UK, like or many countries, especially the Anglo-Saxon model, the state pensions power is really sorry, the state pension is really not sufficient. However, I think I think there is plenty of like basis for the state to actually start um, directing it to more like, sustainable stuff. If I think the question is the political will. I don't see why not. Like I don't see why it wouldn't be possible. And with the same logic, like the state can absolutely like ban like exclude investing in certain sectors for private pension funds. I think both are like really the matter of political will and the working class power. Again, I think it goes back to this like decrease in the union density, and the unions working class have lost a lot of power. I think that's a more fundamental question to this.
Yeah, I think maybe the implication of that is for unions to start encouraging the development of the political will necessary to make some of these changes. Manuel, do you have any other thoughts? Okay, I did want to ask another question to both of you around something that Manuel, I think you both mentioned it about the implications of an increasingly aging population and the narrative around longer working lives, meaning that things like the age of retirement is being pushed aggressively across countries, with the implication that like people can work longer without considering whether that's actually true or what the implications are for like other components of the system. And I wonder if you have any thoughts about like the political aspect of this discussion around the age of retirement and its implications.
It's a difficult one for me.
Um, I can try. I can try. The implication of the like retirement age being pushed further and further. Um, yeah, it's I think I again sort to keep bringing Korea here, but one thing I noticed is that like here in the UK, people want to retire early, and people like there's in Europe you see like huge like push against like the states trying to like increase the retirement age. Like you see that in France and everywhere in the West. Um, but in Korea, like people actually look for actively, many people actively look for jobs where the retirement age is unspecified, or like, as late as possible. And I think that again comes from the fact that Koreans never had a welfare state. so this mindset of like survival, like self-survival or like survival of the fittest, I would even go to, it's kind of like really ingrained. But I mean, I do think that the 60-year-old today is definitely far more capable of working than 60-year-old like 102 years ago or 200 years ago, right? But and but I think it shouldn't be forced out of necessity. I think that's the kind of key thing. People shouldn't have to work when they're 70 or 80. Like it should be, I think, more like you know, if they want to, continue working, like, um, but the foundation of that must be that, we if we have all the basic needs, like, if houses are affordable and education is affordable, healthcare is affordable, all these things, again, I think it all like goes hand in hand. That again, if the pension is there, then we can just leave it to, yeah. But people being forced later and later is obviously not the right direction.
Yeah, I would definitely see the increasing age of retirement as like the cut in pension provision and like a cut in the welfare state as a result. So I agree with that assessment about the need for that to come for people who want to work rather than are required to work. Um, so there's another question I think that could be important to come back to by George that says that seeing as we keep coming back to it, do you have a hypothesis of as to the cause of the decline of working class power? I realize that's a very broad conversation, but as we're coming towards the end of our time, it might be worth going back to that bigger question since that's a big theme in the larger Faith series.
I think there's probably many answers to this, and I think one of them is a very generic one, which is it's neoliberalism. It's not a very satisfying one, but I think there's many aspects of neoliberalism that have to do with this. I think a slightly more precise answer is that this has been an organized effort to do so. You can find think pieces by right-wing think tanks going back to the late 70s and 80s, where it's being discussed that this is necessary, according to their viewpoint, of course. And then you see some of these things then seemed very far-fetched, but some of them have been rolled out in the meantime, especially in the US. Some of the things from these think tanks, some of them were directly linked to the Republican Party, some of them not so much. Some of them historically much more fringe, now much more in the center. Yeah, they have basically been executed over the years. It maybe happened with a delay. It didn't happen with the big neoliberal shifts you saw in the late 80s and early 90s. Some of it has been implemented later, but some of this has been on the agenda of specific right-wing interests and have been executed in that way. So that's probably a very partial answer, but I do think that's one important factor.
Yeah, it's a big question, right? Well, I think, yeah, like I agree that the neoliberalism, like the rise of neoliberalism, was a kind of a concerted effort from the ruling class to fight back against this rising working classes and the more and more radical demands. And I think I would point to two things. First of all, they were willing to go to the length of actually demolishing industries in order to break trade unions. Um, Privatize all the sectors and then but also and like like offshoring, like you open the capital border for capital and then they go offshoring, all that sort. But also on the other hand, I think the division of the working class sort of kind of uh, creating more and more like stratification and fragmentation within the working class has worked quite effectively, I think. Like the blaming of the migrants and stuff like that was very useful. And like when the working class could see that like what I have these other people don't have, I think it kind of sometimes works as a deterrent for the haves among the working class to really fight quite ferociously, because it's a fear-mongering tactic. Like, oh, I don't want to fall to that stage of like the have-nots. And yeah, I think the concerted efforts from the ruling class have worked quite successfully.
Um, I wanted to go back a little bit to the questions around real estate, mortgages, pension systems, just briefly. Um, a phenomenon that's like quite prevalent in the US is the increasing role that your housing assets have in whether you're like ready for retirement or whether you have sufficient retirement funds in this individualized system. And so increasingly more and more of the share of like, are you ready for retirement is tied to this asset on the expectation that you would then sell that asset and then like use the profits from that. And I wanted to know both of your thoughts on like what are the implications. Firstly, do you see that in your respective countries and like in the different systems that you have both studied? And then also, what are the implications for this discussion that we're having around a truly socialized system of housing, a truly socialized system of caring for the elderly?
Yeah, I think that's a good question. I think this is specific to the US and a few other countries to some extent, because also people in the US tend to move much more. There were some old statistics, so they might not be accurate anymore, but people in the US move twice as much as people in the UK. People in the UK move twice as much as people in the Netherlands, who move twice as much as people in Germany. And Germany is largely a country of renters, right? It's 50% tenants. So it also means that in the US, built into the system, there is this mobility within the housing market. In the UK, they often talk about the property ladder, but people actually don't move as much in the UK as they do in the US. What I always find striking, colleagues in the UK, they change jobs every few years from one university to the other one. Whereas in continental Europe, once you're in a university, you typically stay for a long time, but they never move. They just commute 2 days a week, if that. So I think the idea then that you can mobilize your house as an asset when you retire, in the sense that you would need to sell it, I think for many people is not a very attractive idea, because then you would need to move somewhere else. And then the problem is, particularly in the US, that elderly care, healthcare doesn't come cheap. In a system where you actually have well-funded public or very well-regulated hybrid between the public and a private healthcare system, you could imagine that something like this could work to some extent. You could move and you could either rent a place with care, or you could buy a smaller flat where you could also get the care within, the larger package that the welfare state provides. But in the US, healthcare being as expensive as it is, like, what are you going to do? You're going to sell your house and cash in on it, but then you might need all that money for the healthcare. So it's not like it's an asset in that sense that you can really mobilize. It's almost a pure necessity to pay your healthcare bills, or at least to have that money lined up to do that. So I think in many countries, people think of home ownership as very important. They think of it's very important for their welfare. Also, because if you're a homeowner, you don't need to pay rent anymore at some point. You pay off your mortgage. So let's say you get a mortgage when you're 30, you pay it off when you're 60, a few years before your retirement. And that means that once you retire, you don't need to pay rent anymore. You don't need to pay a mortgage anymore. So I think in many countries, that is a key to pay off your mortgage before you retire, because your pension may not be high enough either to pay for the rent or to pay for that mortgage. But then actually, if that's a feasible alternative for people, that's actually not such a bad alternative to have your own house and be able to live there. And many people don't want to move necessarily. So I think in a different way in many countries, that idea of the home as an asset is important, but not as an asset to sell, but an asset to make sure that some of your expenses stay lower.
Yeah, I agree. Actually, that's quite shocking, Manuel, because when I searched for the Korean data, Koreans move like so much more than the US or the UK. So, but it's actually precisely because people move houses as a means to increase assets. Um, and But it's a good point. People rarely actually downsize when they retire and then like cash in. I know that there's this thing called reverse mortgage. The government has been trying to promote that. It's basically like you now like get collateralize your own housing, like assuming that you've paid off all your mortgage, then you now kind of collateralize your own housing that basically to the government, and you get money each month, kind of with the notion, like the deal is that when you die, the house will become the state's. So it's called a reverse mortgage. The state has been trying to promote it for quite some time. But the presence of it is has been quite meager. Um, but yeah, I think retirement income, like the key is to the less expense you have, the easier it is. Like it's not so much about like you're making a ton of money after retirement, I think. Um, and yeah, it's a difficult question. How should as a society we take care of our elderlies? But yeah, I think all of these things that Manuel mentioned in the very beginning of the slides should really go hand in hand. Yeah.
Yeah, to me, the thought comes to mind that like this process of encouraging that way of sort of, drawing down from your asset and so on may potentially be like also limit the ability to like collectively organize, collectively like, be invested in your community in a way that can be resistant to some of these sort of neoliberal tendencies. Um, one potentially open-ended question that I would want to ask is that um, and going back to this question from earlier as well, that a lot of the discussion around pensions, around a lot of the discussion around housing, um, and a lot of the discussion around like the role of unions in acquiring a strong pension, in providing housing, and so on and so forth, um, is often subordinate to whether your framework is limited to sort of like the classic like reform capitalism versus reimagine a society outside of capitalism, and that question of like where do pensions, where does socialized housing fit into that framework. um I would love to hear some thoughts from both of you about like how you see that discussion.
I
You want to go first?
Oh, it's a really difficult question. I mean, I don't have much to say. And I wanted to say though that yeah, all this discussion is kind of limited within the boundaries of capitalism. Like as I said, pensions are inherently a capitalist thing because self-subsistence has been eradicated. And, basically what they're trying to tell us is that they left us with nothing else to sell but labor power. But as soon as we are too old and our labor power is not valuable enough, they're now saying that, well, you can just go screw yourself, right? Like, oh, you should have saved better, like you should have invested better. That's what has been happening. So yeah, if we, and hopefully if we move beyond capitalism, if we live under a different society, then we'll certainly have different kinds of questions. Well, given the fact that people are living pretty long, like I think, at some point people will stop working, that's for sure. But if the economy is not structured around the market where everything has to be bought and sold, then the entire questions like housing, pensions, education, healthcare, these will be a completely different set of questions. But what they would be, I still don't know.
So I don't believe there is at some point a moment where you go from reform capitalism to some sort of alternative. I think the alternatives are already existing around us, some of these alternatives. So for me, this is not a black and a white picture. I think also, if you want to call it reform capitalism, the welfare states of continental Europe in the 1970s, by and large, without, not mentioning, I don't want to say they didn't have any problems, they work quite well. Maybe that was reform capitalism, but it worked quite well for many people. I think, yes, there's interesting discussions to be had about alternatives to capitalism, but I also believe that something should be done in a democratic way. And I see now that this is not feasible right now. Yet there are existing alternatives. If I look at the housing field, like having housing that you take off the market might be reform capitalism, but in a way, if you take a lot of that off, you have a non-capitalist system. If you have, as some West European cities did in the 70s and 80s, if you build 95% social housing, which cities like Amsterdam, Rotterdam, Vienna did at some point, then in effect you do offer an alternative. If you keep doing that for decades, which they didn't do, you build up an alternative. If you have community land trusts, the city where Bernie Sanders was mayor, it's a small city. There, the community land trusts, I believe, is the biggest landowner. So it is possible to do this through a sustained effort, and it can be with government intervention. It can be through the nonprofit sector. Very often, it's a combination in different ways of the two. These things are possible, and I think we have to, in a way, support these actually existing alternatives that happen now within the system. But there's also yeah, there are weird alternatives to this. If you think of a city-state like Singapore, I would say it's probably one of the most capitalist places on earth. We can discuss like what would be the most capitalist and the least, but I think many of us would agree that if you look at Singapore, it's definitely highly capitalist. Yet most of the housing in Singapore is taken off the market. They call most of the housing public housing. It's not public housing as we know it in other places. It is actually a form of government built, government regulated, but individually owned housing, but it's not resold for typical market prices. It's completely restricted. So the government is involved in everything because what did they say in Singapore? Basically, we want a fully capitalist state. And if we want to do that, we need to do it in such and such ways. But we need to take land off the market because if we're going to have land also as part of the market, the rest will fall apart. And this seems very radical, and therefore I think it's interesting that it's a hyper-capitalist place like Singapore doing it. But if you go back to early liberal thinkers, so not just socialist thinkers, but early liberal thinkers, several of them argued that land surely should not be marketized because just like money shouldn't be marketized. So it's quite interesting that there are these alternatives possible, and they're not necessarily conceived by radicals. Some of them take land completely off the market within otherwise capitalist systems.
Thanks so much. I think we're pretty much almost, I mean, I think we're kind of winding down now. Do you want to take a quick look if there's any questions in the chat that you'd like to answer? Otherwise, we can wrap up now.
I mean, there's some questions about the universal basic services and more discussions about pension funds and the state investing in them. There's also parallel discussions about the foundational economy. I think that's very interesting for people who don't know about but are interested in these issues. Look up foundational economy. There's some open access books about it as well. I'm not advertising any of my own work because I haven't written on it. So that's not the case. But I think there's a very interesting discussion there where in this literature about the foundational economy, they basically argue that most of the jobs that we care about, things like healthcare and education, for instance, are locally bounded. These are not jobs that we can move to a low-income country, but these are jobs that we really need for the quality of life. So they need to be local jobs. And this could be things that we really value as part of our urban economy, of our local economies. But these are also things that then need to be invested in. And also labor needs to be compensated properly for this. But that you can actually think of these as substantial economic sectors, because if you add up all the healthcare, all the labor within the city, these are actually significant economic sectors, very often bigger than what we think of as the big economic sectors within the economy. So it's a way to rethink these foundational parts of the economy, and not necessarily to socialize them. I'm open to discussing that, but that literature would argue that we need to take them seriously as parts of the economy and not just like, oh, this is education, this is health, and also discussing the kind of benefits they have for society at large.
I wasn't
Hwanhee, do you have
able to
any?
really read so much. I'm a slow reader, sorry. Yeah, but I don't have too much to add at this point.
Okay. And any final thoughts from either of you before we close today's session?
Don't accept the status quo. It's a very general one, but
That's a good one. I just actually wanted to say one thing about it. I mean, there were many things I wanted to talk of, include, but got excluded in the chat, like things like salary sacrifice scheme or like employee stock ownership plan, things like that. I see them as and by and large, the sadness of like pensions these days, I'll just focus on the pensions, is the fact that like even this like the because the wage has been so stagnant, real wage has been so stagnant that many people can't even afford to put aside a chunk of their money like into their pension pots these days. You know, so many of my colleagues ask me like, oh, should I drop out of, opt out of my pension scheme? And this is the one thing that the university will do so quickly. University administrations are notoriously slow, but if you opt out of pension scheme, the university will get it done the next day. Um, and yeah, it's a sad thing that but yeah, I agree with not accepting the status quo, and we really need to like I like this I think shows that pensions are tied to the low wages, and the again going back to the union power being undermined. So yeah, we shouldn't accept status quo, and we need to start asking more fundamental and more radical questions again.
Okay, on that very powerful note, I think we can end today's session now. Thank you both so much for your lovely speeches. Thank you everyone for attending, and thank you for the very, very fruitful and productive debate and questions and so on. The next SAPE series session will be sometime next year, early next year.
Yeah, it's on the
Um,
1st of January, I think.
okay, great. Yes, and there are many more of these lecture series to be coming in the next few months. So please do attend. Thank you all again for attending. We can close now.
Thank you so much.
thanks for being a great chair.
Thank you.